Welcome back to the Hectare Trading Grain Market Update, where we brief you on this week's events and what's behind movements in the market. The Hectare Trading Midlands benchmark is £182, up £8 from last week. The focus for wheat has shifted forcefully from abundant old crop stocks to severe new crop weather risks and input costs. According to the USDA's Foreign Agricultural Service, Australia's 2026-27 wheat crop will drop 19% to 29 million tonnes, while Canada's wheat output is also expected to fall by 10% to 36.16 million. Meanwhile, EU wheat production for 2026-27 is forecast to decline to 136.8 million tonnes from last year's 145.1 million tonnes due to reduced planted areas. After breaking through £180 at the tail end of last week, the London feed wheat May contract soared to £190.20 by Wednesday's close, its highest level since July 2025. Pausing for breath, the contract eased back to £187.90 on Thursday. On Hectare Trading this week, we've seen forward selling of new crop feed wheat across a range of movement months in East Anglia as farmers aim to lock in higher prices. The Midlands benchmark price for milling wheat is £186, up £9 from last week. US hard red winter wheat futures continue to rise, as 70% of the winter wheat crop area is now in drought. Only 30% of the crop is in good or excellent condition, compared to 49% last year. Preempting tighter supply, some US millers have resorted to importing shipments of Polish milling wheat. As the May contract of Paris milling wheat winds down, the September contract has strengthened this week, finishing Wednesday at €217.25. Thursday saw the contract retreat back to €213.50. On Hectare Trading this week, farmers in Northumberland and the Scottish borders have been forward selling new crop Group 3 wheat. We've also seen the selling of Group 4 hard wheat in Oxfordshire and Buckinghamshire. The benchmark price for feed barley is £163, up £3 from last week. UK feed barley is finding modest support from compounders seeking value against expensive wheat, with export interest noted from Ireland, Portugal, and the Netherlands. Sellers will be watching the impact on feed barley of the UK malting barley market, which remains extremely sluggish, suffering from a 20% year-on-year drop in usage by brewers and distillers. Farmers have been locking in prices on this year's feed barley this week, selling new crop forward in East Anglia, in Yorkshire and the Humber and the South East. The Midlands benchmark price for OSR is £460, up £19 for the week. Oilseed prices remain structurally supported by the surge in crude oil prices, which has bolstered biodiesel demand. Attention now turns decisively to this year's crop. While the EU expects a 2.7% increase in 2026 OSR acreage to 6.3 million hectares as growers sought to capitalise on higher prices last autumn, overall yields are expected to decline slightly. The August contract for Paris rapeseed has made steady progress, after closing last week at €503. After closing Tuesday at €513, the contract rose to €521.50 on Wednesday and eased back on Thursday to close the month at €520.75. Once you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news. That's all for this week. Don't forget to sign up to get the latest market insights and click subscribe to get the next update.